Here we are in the first week of 2023. I'm sure there's one big question in everybody's mind. How much more would interest rates go up this year? Well, interest rates is certainly a top concern for many people. If you're an investor, well, interest rates will have a significant influence on the economy and hence the market. Or if you are planning to buy a home, or if you are carrying existing mortgage payment, or if you currently or regularly carrying credit card loan or personal loan, so it will have a huge impact in your personal finance. So how much will interest rates go up? What should we expect? Well, knowing where things are heading, at least that would allow us to plan ahead and make better decisions. So let's take a look at what we should expect this year. Well, first of all, let's take a look at when the Federal Reserve will decide if they will change the interest rates. So basically, the Federal Reserve have 8 scheduled meetings for 2023 between February through December. And in those meetings, they will discuss and decide if they will make any change on the interest rates. Now, as for the Bank of Canada, they also have 8 meetings scheduled for this year between January throughout December. Since the US is the largest trading partners for Canada, the Bank of Canada will certainly consider the direction of the US interest rates among many other things, as it would not be able to keep the difference in the interest rates between Canadian and US dollars too far apart. So where the US interest rates is heading, let's take a look at that. The Federal Reserve will make the decision based on various data and updates from the economy. For example, the new employment rate or employment situation for last December will be released this Friday. And also the CPI Consumer Price Index for December will also be released by next week. That would give us a very good indication as to whether inflation continue to go up or it kind of slowed down. However, we can take a look at several things to determine where the Fed is heading. Well, the bottom line question is, at what terminal rates the Fed believe they are able to cool down the economy and control inflation effectively?
If you think about where we've been over the last 2 decades, we haven't had high inflation, we've had low rates. We're now moving into a very different time. And I think for myself and for my colleagues, we understand that high inflation is going to require our action. So we have been moving our forecast up to higher levels. You saw that in the most recent dot plot that came out in December. And I think holding that until we get confidence that inflation is actually coming down.
Well, if we take a look at the chart here, of the 19 Federal Reserve officials, 10 of them believe that it should be at 5.13, while another 5 believe that the terminal rate should be at 5.4%.
I'll be over 5%, and I see staying there for some time. Again, until we get the signals that inflation is really convincingly starting to fall back toward our 2% goal.
Is that well into 2024?
It is for me.
Wow.
Given today's, we're sitting at 4.38, which means we have another 75 basis point to 100 basis point to go, which means likely the Fed is looking at another 0.75 to 1% rate hike. Currently, the market is using the base case of 25 basis point rates increase each in February and March for a total of 50 basis point or 0.5%. By May, where are things heading? Well, here's the market survey showing what investors are forecasting. While 8% of them believe that the Fed will start seeing the impact on the economy and will start cutting rates by 25 basis points. While 40% of them believe that they will stay at that level for the remaining of the year at 4.8% terminal rate. While another 40% believe that the rates will have another 25 basis points to go, so a total of 75 basis points, while the remaining 11% of investors believe that they will raise another 50 basis points in the remaining 2023 for a total of 1% increase in interest rates. What we will actually end up with in terms of interest rates, nobody has the crystal ball. But at least based on this information, the view from the Fed officials as well as market participants, we can safely expect we're going to be looking at another 50 basis point or 0.5% to 100 basis point or 1% of interest rates increase this year. Now, even with the base case of 0.5% to 1% interest rates increase for 2023, there's always a possibility that they may hike more than 1% or, on the other hand, start cutting rates. It all depends on everything from unemployment rates and whether the economy ended up into deep recession, or the pandemic situation, the development, the China situation, and the Ukraine and Russian war, and it all depends on how things develop throughout this year. So we will keep an eye on the developments. Well, I hope this video is useful for you, whether you are an investor or you're planning to buy a home, or you currently have mortgage payment, or simply for planning your personal finance. If you enjoyed this video, please like, subscribe, and share with others so others can also benefit from the information. And don't forget the notification bell so you won't miss other video. If you're interested in learning more about the markets, the economy, and investing, please join my Facebook group for Value Investor. I will include the link below here. Also, I will be hosting a 1-hour live event this Saturday where I will share some very exciting information on value investing and also a portfolio which outperformed the markets by more than 30% last year. All right, take care. Until next time.